Welcome to the deep dive.
Hi there.
Today we're diving straight into the world of digital dollars.
Yeah, a really fascinating area right now.
We're looking specifically at stablecoins, their growth, and also how blockchain tech is starting to find its way into the public sector.
Right.
Now, that might sound like, well, a lot of information.
It definitely can be.
Yeah, so that's why we're here, basically, to try and pull out the really crucial bits, the interesting stuff for you.
Absolutely. And we're leaning on a pretty solid report here, Digital Dollars, just out April 2025.
And the list of contributors is quite something.
It really is. You've got Citi, PwC, Stellar Development Foundation, MasterCard, the World Bank, loads of others too.
So a real range of expertise.
Exactly, from finance, tech, development.
Ah.
It gives it real weight.
Okay, so our mission then for this deep dive is to get a handle on why stablecoins and blockchain are gaining traction now.
Right. What's the potential impact?
Yeah, what could they mean, and what are the key things to watch, especially, for government's public services?
Cutting through the hype and the jargon.
That's the plan. Okay, so let's jump in. The report kicks off with a pretty bold claim.
Oh, yeah?
That 2025 could be blockchain's ChatGPT moment.
Yeah.
Particularly in finance and the public sector.
Oh, that's a strong analogy.
It is. What's behind that thinking? Is it just hype, or is there something concrete driving it?
Well, the report argues it's really about regulation starting to catch up.
Okay.
They point specifically to the U.S. expecting a more supportive regulatory stance.
Right, clearer rules of the road.
Exactly. Think about how the internet took off once there were clearer frameworks. It could unlock a lot of innovation and investment for blockchain, too.
So that ChatGPT moment really means hitting the mainstream faster.
That seems to be the idea, yeah. Moving beyond niche applications.
Makes sense. Okay, so central to this whole digital dollar thing.
Yeah.
Stablecoins. For anyone maybe still wrapping their head around them, can you give us the quick version? How do they work?
Sure. So at its core, a stablecoin is a digital currency, a crypto token, but it's designed to keep a steady value.
Unlike, say, Bitcoin.
Right. It achieves that by being pegged or linked to a stable asset. Usually that's a traditional currency like the US dollar.
Okay, pegged to the dollar.
Yeah.
How does that peg actually work in practice?
Typically, it's pretty straightforward. You, the user, deposit regular money, say US dollars, with the company that issues the stablecoin.
Right.
That issuer then holds on to those dollars. Usually they keep them as reserves, often in like actual cash or really safe short-term things like US Treasury bills.
So very low-risk assets.
Exactly. And in return for your deposit, you get the equivalent value in their stablecoin.
So one digital dollar for every real dollar they hold.
That's the principle, yeah.
Yeah.
You can then hold these stablecoins in a digital wallet, spend them, send them like digital cash, essentially.
So it's like a digital claim check on real money held somewhere safe.
That's a good way to put it. An IOU backed by cash or cash equivalents.
Got it. And the growth here, the report mentions a 30x increase in just 5 years.
Yeah, it's been explosive. Absolutely staggering growth.
So we're talking big numbers now.
Oh, yeah. By March 2025, the total stablecoin supply was over $230 billion.
Wow.
And the projections, they're suggesting it could hit like $1.6 trillion by 2030 in their base case scenario.
$1.6 trillion.
Yeah. And the bull case, the more optimistic one, goes up to maybe $3.7 trillion.
That's massive potential scale.
It really is. Though they do add a note of caution, if adoption hits roadblocks, it might be closer to $500 billion. Still significant, but, a range.
And it seems the US dollar stablecoins are set to remain dominant.
Looks that way. The report expects USD-pegged stablecoins will probably still be around 90% of the market by 2030.
So global demand for dollar exposure remains strong, even in digital form.
Absolutely. And here's a really interesting side effect of that. Because these issuers need to hold all those reserves in safe assets, mostly US Treasuries,
Right.
the report suggests these stablecoin companies could actually become some of the largest holders of US Treasuries by 2030.
Seriously. Bigger than some countries.
Potentially, yeah. Maybe exceeding some major jurisdictions that hold treasuries today. That's a huge potential shift in the financial plumbing.
No kidding.
Yeah.
So who are the big fish in this pond right now?
Well, it's pretty concentrated at the moment. Two main players really dominate.
Okay.
You've got Tether with USDT and then Circle's USD coin or USDC.
Right. I've heard of those.
Between them, they've got something like over 90% of the market share.
Wow. Okay.
And USDT, Tether, it's been around a while since 2014. Started on Bitcoin's network, but now it's on lots of different blockchains like Ethereum and Tron.
Tron's become quite popular, hasn't it? Especially in Asia.
Yeah, apparently its speed and lower transaction fees have made it attractive there.
Okay, so massive growth, concentration of power.
Mm.
What are the upsides? Why are people using these things? What are the opportunities?
Well, the big promise is faster, cheaper payments.
Especially across borders.
Exactly. Available 24 and 47, 365 days a year. That's a big deal compared to traditional banking rails that have cut off times and weekend delays.
I can see the appeal for businesses.
Definitely. The report mentions use cases for small businesses needing to pay international suppliers or big multinationals managing global cash flow more efficiently.
And what about in emerging economies?
There's potential there too. Maybe hedging against volatile local currencies, making remittances cheaper and faster.
Like sending money home.
Yeah. And potentially improving financial inclusion, giving people access to digital dollars even if they don't have a traditional bank account.
And are we seeing established players getting involved? Banks, payment companies?
We are, yeah. And their involvement helps to legitimize stablecoins, bringing more trust and regulatory oversight.
Okay, sounds promising. But there must be risks, right?
Mm.
What's the other side of the coin?
Oh, absolutely. The biggest one is probably regulatory clarity, or the lack of it still.
Still a bit of a Wild West.
Well, it's evolving. In the US, you've got different proposed laws like the Genius Act, the Stable Act, but they differ on things like, who can issue stablecoins, what kind of reserves are okay, market cap thresholds.
So uncertainty.
Exactly. And that uncertainty isn't great for adoption or stability.
Mm-hmm.
Then there's the risk of the stablecoin actually losing its peg.
Breaking the buck, essentially.
Right, where one stablecoin is suddenly worth less than $1. It's called depegging.
Does that actually happen often?
It does. The report mentions something like 1,900 depegging events in 2023 alone.
1,900? Wow. Were those mostly small ones?
Mostly, but it did include some larger cap stablecoins too, and when a big one wobbles.
Like USDC during the Silicon Valley Bank failure.
Exactly like that. It briefly depegged. That kind of event can cause panic, affect liquidity in the crypto markets, and potentially even spill over into the traditional financial system if these things get big enough.
That's a serious concern. And the report mentioned something about stablecoins acting like narrow banks. What's that about?
Yeah, it's an interesting debate. A narrow bank is basically a bank that only holds super safe liquid assets like central bank reserves or government bonds and doesn't do risky lending.
Okay.
So the idea is if lots of people start holding their money in stable coins instead of regular bank deposits.
Banks would have less money to lend out.
Potentially, yes.
Yeah.
That's the concern raised by groups like the IMF. It could reduce bank lending capacity, which might slow down economic activity, at least initially.
But others disagree.
Right. Some argue, like folks at the Cato Institute mentioned in the report, that the financial system would adapt. And maybe this kind of narrow banking structure could actually make the system less prone to bank runs and crises.
So a fundamental debate about the structure of banking itself.
Pretty much. Big implications.
Definitely something to watch.
Uh-huh.
Okay, let's shift gears slightly. The report also dives deep into blockchain in the public sector.
Right. Beyond just stablecoins.
What's the core argument there? Why should governments be looking at this technology?
The main idea is about trust and transparency.
How so?
Well, traditional systems usually rely on a central authority, a government agency, a registry to manage data and verify its accuracy. You trust the agency.
Right.
Blockchain offers a different approach. It's decentralized. Trust is built into the system itself using cryptography, complex math, basically.
So it's harder to tamper with records.
Exactly. It makes data verifiable and tamper evident, meaning if someone does try to change something illicitly, it's detectable by the network. This can boost transparency and accountability. You're trusting the code and the network, not just one institution.
Interesting. The report singles out Estonia as a pioneer here.
Yeah, Estonia's fascinating. They were really driven by necessity, being a small country needing efficient solutions after regaining independence.
Digital pioneers.
They really embraced digital government early on, back in the late 90s. They saw the benefits. Then in the late 2000s, they started using a custom blockchain system called KSI, Keyless Signature Infrastructure.
What do they use it for?
It acts as an integrity layer for various government systems, like their National Health Registry. But, and this is important, they don't store the sensitive health records on the blockchain.
Ah, okay. So what is on the blockchain?
Metadata. Information about the records, like who accessed a record, when, if any changes were made. It creates an immutable log.
So it proves the integrity of the data without compromising privacy.
Precisely. It balances transparency and security, and it was also more practical given blockchain's limitations for storing huge amounts of data. It's about building citizen trust that their data hasn't been messed with.
That's a really smart, pragmatic approach. So beyond data integrity, what other public sector uses does the report highlight?
Oh, quite a few promising areas. One big one is public spending and finance.
How could blockchain help there?
Think real-time tracking of expenditures, making it harder for corruption or fraud to happen, easier auditing, using smart contracts for things like government tenders or paying suppliers automatically when milestones are met.
Automating payments.
Yeah, streamlining tax collection, maybe even issuing digital government bonds. Dubai's paperless strategy is aiming for something like this across the board.
Okay, what else?
Disbursement of funds and grants. Blockchain could make distributing aid or grants much more efficient and transparent.
Cutting down on paperwork and potential fraud?
Exactly, and lowering admin costs. The World Bank has an initiative called FundChain,
Right.
which uses a private blockchain to track funding flows and spending in development projects in real time.
Interesting. Private blockchain in that case.
Yes, for controlled access. Then there's public records management.
Like land titles.
Land titles, voting records, maybe even medical histories. Making them secure, tamper-proof, maybe more easily accessible to citizens when needed.
Examples.
Singapore uses blockchain for verifying educational certificates open certs, and Georgia put its land registry on the Bitcoin blockchain quite early on.
Wow, okay. Keep going.
Humanitarian aid is another area, improving coordination between agencies, transparent crowdfunding, tracking aid supplies from donor to recipient.
Ensuring aid gets where it's needed.
Right. The UN Refugee Agency, UNHCR, has used the Stellar blockchain for distributing cash assistance to refugees. They reported cost savings, better transparency, and more security and control for the recipients.
That's really impactful.
Then there's tokenization of assets,
Meaning
representing real-world things or financial assets as digital tokens on a blockchain. Think government bonds, infrastructure projects.
making them easier to trade or invest in.
Potentially, yeah. Increasing efficiency and accessibility. The European Investment Bank has issued digital bonds, for example. Lugano in Switzerland issued bonds using the Swiss National Bank's wholesale digital currency. There's also Project Promissa for tokenized promissory notes between big financial institutions.
Lots happening there. And one more.
Digital identity, using blockchain for secure, tamper-proof identity verification.
Giving individuals more control over their own data.
Exactly. Self-sovereign identity is the idea. It could be particularly valuable for people without standard ID documents. Zug in Switzerland has experimented with this, and Brazil is working on a national blockchain ID.
So the potential uses are really broad.
They really are, touching many parts of how government interacts with citizens and manages resources.
But it can't all be smooth sailing. The report must mention challenges, right? What's holding back wider adoption?
Definitely. There are significant hurdles. One is just a basic lack of trust sometimes because the tech still feels experimental to many.
The Crypto Association doesn't always help.
Probably not, yeah. Then there are technical issues like interoperability, getting different blockchain systems to talk to each other, and scalability, handling lots of transactions efficiently.
Can it handle government-level volumes?
That's still a question for some applications, and just the sheer difficulty of transforming existing government IT infrastructure. It's complex and expensive.
Bureaucracy and legacy systems.
Big hurdles. Plus, regulatory uncertainty is still a factor. The legal status of blockchain records, digital assets, smart contracts, it's not always clear.
And the risk of misuse, illicit finance.
That's often raised, yeah. The report acknowledges it, but also notes that illicit use is actually a pretty small percentage of overall crypto volume. Still, it's a concern that needs addressing.
Any other barriers?
Just resistance to change within government sometimes, and maybe public perception being skewed by the speculative side of crypto markets overshadowing the practical blockchain uses.
Makes sense. The report also briefly touched on public versus private blockchains for these uses. What's the quick takeaway there?
It's basically a trade-off. Public blockchains like Bitcoin or Ethereum are open, decentralized, very transparent, generally very secure because of that openness.
But downsides.
Scalability can be an issue. Privacy is harder because data is public, and fitting them into existing regulations can be tricky.
And private blockchains.
They're permissioned, a specific group controls who can participate. So you get more control over privacy, potentially better scalability for specific uses, maybe easier regulatory compliance.
But you lose the decentralization.
Exactly. You're trusting the group that runs it. The report kind of compares it to the early days of cloud computing.
How so?
Remember how governments and big companies were initially hesitant about public clouds for sensitive data, worried about security, control?
Yeah, lots of talk about private clouds back then.
It's a bit similar with public blockchains now in the public sector. There's caution about putting critical infrastructure on these open networks.
That's a helpful analogy.
Hmm.
Okay, this has been incredibly insightful, a real deep dive. If we try to boil it all down, what are the main takeaways from the report?
I think the big picture is clear. Stablecoins and blockchain tech are moving fast. They genuinely have the potential to shake up finance and how the public sector operates.
And regulation is key to unlocking that.
That seems to be the consensus, yeah. Upcoming regulatory clarity, plus the inherent push for more efficiency and transparency, are really driving the momentum.
So that ChatGPT moment analogy,
Mm-hmm.
it feels like we really might be on the verge of something significant.
I think so. It's not without challenges, obviously. We've discussed those. But the direction seems set. We're seeing more pilots, more real-world use cases popping up all the time, especially in government. Wider integration feels likely in the coming years.
Okay, so looking ahead then, considering all this potential, the efficiency gains, but also the potential disruption,
Yeah.
what's a final thought to leave our listeners mulling over?
It probably comes down to this. As these digital dollars and blockchain systems get more integrated into, the very fabric of our financial and public lives,
Yeah.
what are the really critical ethical questions, the
Yeah.
societal impacts? We need to think hard about those beyond just the technology itself. Things like fairness, access, privacy, the potential for new kinds of inequality, who benefits, who might be left behind.
So looking beyond the code to the consequences.
Yeah, exactly. It's crucial we have those broader conversations as this all unfolds.